Hello from the Dukascopy TV studio in Geneva. I'm Daniel Schwenger. We're talking about developments in the private equity sector with Raffaele Petrone. He is Investment Director Private Equity in Europe for LFPI. Raffaele, welcome to the studio.
Hi, Daniel. It's nice to be here.
LFPI is focusing on investments in private equity in mature markets and especially in Western Europe. Why is that?
Yes, because in our experience, private equity is a very local business. To develop stronger relationship with managers and local financial institutions, we place high importance on the fact, on the ability to have a local presence and to speak the same language. It's critical to know the culture, how the business is managed in each country, and how the fluctuations in the political and financial environment can affect the market of private equity in Europe, in each single country. With its presence in France, since 2007, our group has tried to diversify its investment scope outside France and try to target the more mature, as I said, Western European market. Today we target this market that is a mature market, but there are still plenty of investment opportunities, especially in the small mid-cap arena. Of course, we think that this market can still generate outstanding investment returns for investors, even if the risk profile can be very different from what you can have in different continents such as Asia or Africa.
And how is this private equity market actually going in 2015? What were the results from 2014 and what is your outlook for this running year 2015?
Yes, in 2014 we saw very good performance of the private equity market. Actually, also the European private equity market was performing like the US market. In American market, we saw an increase of deal activity, mainly driven by the stock market. So the market got a lot of momentum in 2014 on the heels of the already good performance from 2013. We could say that we saw very high signs of good recovery in the market. This recovery was coming from good deals, a lot of good pipeline, especially in countries such as the UK or the Southern Europe or the Nordic market. In particular, in the Nordic market, we saw the 2014 showed the strongest performance in the last 5 years. At the same time, we think that the real star of 2014 was the exit market. With so good public market and with valuation going up, especially thanks to cross-the-border corporate acquisitions, we saw many of our funds or our portfolio company be able to exit the market. In general, in many cases, the cash distributed was much more higher than the fair market value. For me, but not only for me, valuation is even if the fair market value is a vanity, we say, while cash is a reality. And when you can really change your fair market value in the cash, this is the best that you can have in an investment. What is really concerned our private equity program in 2014 was that our LPs could really benefit from high cash distributions that they never saw before. Now, going into 2015, we think that the market will continue this good performance. The pipelines today is vital and full of good companies. We expect that the bulk of the deals in 2015 will come mainly from the DACH region and the Southern Europe. For example, if I give you an example, Italy, a country that of course I know quite well, we see there good companies with good brands exporting outside Italy and with a very interesting entry value.
And so there are good opportunities in 2015, so you're positive for the year.
Today, another important point that we can see in 2015 is the value creation. As you know, in private equity, value creation doesn't come only from operational improvement or the leveraging. Multiple arbitrage is still an important component. Today, with the US pricing back at the 2006-2007 level, there is a big demand from US private equity funds or US companies, so the price in certain ways going up. This can generate a good investment return, but at the same time, even if we think that this can be an opportunity, personally, we will never build our investment case on that. Because we try to invest in companies that can generate value mainly to the most important layer which is operational improvement.
Mm-hmm. Let's switch to the fundraising environment in 2015. So how do you see that in general, and especially the secondary market and its development?
Yes, the market has become very selective in terms of fundraising. In a certain way, we can say also the market has become unfair. Of course, we see good managers, good companies, good funds that can easily raise money. Few of them, they also reached their hard cap before going to the market. This was thanks to the high re-up rates of their existing LPs. On the other hand, we saw that there are many of them are suffering. Not always the difficulty in fundraising is not always related to the performance. Sometimes their disadvantage is due to their weak LP base that in many cases is composed of financial institutions or commercial banks. Today, as you know, for high capital requirements, many commercial banks are obliged to reduce their exposure to the private equity asset class. So these funds today are suffering. For what concerns the secondary market, from an LP's perspective, the private equity is very bullish. Also, we see here that financial investors are trying to sell to clean their balance sheet. But at the same time, there is a lot of dry powder that is increasing the prices. To generate good returns in this difficult and competitive market, you should focus on a transaction out of the beaten path, or more specifically out of the broadly actioned channel.
And so finally, do you think private equity is still an attractive asset class?
My answer to this question is yes. If you ask me, even if the private equity will generate superior returns to the investors also in the next couple of years or in the next 5 years, I will give you the same answer, yes. This is because we will see that 2015 will be a very good year for both exit and investments. In the current macroeconomic environment, with a zero interest rate, I think that if you are a private equity investor and you are quite selective, you can still pick up a good investment in a very niche market, and you can build them through, for example, through a build-up strategy, and then generate interesting return to the investors.
Raffaele Petrone, thank you very much for being here today in the studio and sharing your expertise with us.
Thank you, Daniel. It was a pleasure to be here.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a great day and see you next time.